Hello, my name is William Streff, and I will be narrating this presentation on behalf of the rest of my Burken Roads group, Tom McGowan, Liang Zhao, and Kyle Fontenelle. The boating industry brought in more than $30 billion in 2009, which is less than 1% of our country's gross domestic product. Marine Products Management believes that there will be an upswing in sales as a result of a 5.6% increase in attendance to this year's boat shows. As sales in the industry are cyclical in nature, as revenues are highly correlated to consumer confidence and their amount of disposable income and inclement weather patterns. Today's fiberglass boats are very resistant to corrosion and can have a long asset life if maintained properly. However, boats are quite expensive to maintain and operate. Gas docks usually charge a $2 to $3 premium depending upon location. Most boats have massive engines as well. The largest one that Marine Products has a two twin 435 horsepower engine and 300-gallon gas tank. So a day in the water cruising around could cost you in the neighborhood of $500 to $1,800. Other fees such as storage, rental space at the harbor, and other miscellaneous maintenance costs can add up very quickly. Because suppliers have little bargaining power over manufacturers, and few materials fluctuate with the market, production inputs remained relatively fixed. Much like a Bentley, boats are handcrafted by skilled laborers, which make up the largest portion of production costs. Marine Products headquarters is located in Atlanta, Georgia, and is the fourth largest boat manufacturer just behind Bayliner and Sea Ray. Robalo is their sport fishing brand, and Chaparral is their family-orientated recreational sport yacht and cruiser brand. They have 137 domestic dealers and 55 worldwide. Although the company's strategy is to continually expand the product line and number of models offered to grow sales, the recent strategy has been to drastically reduce dealer inventories. As you can see, with boats ranging from 18 to 42 feet, costing between $35,000 to $877,000, there is a boat in everyone's price range and needs. Marine Products' main competitor is Brunswick, which had $20 million less in sales in 2009. Not many publicly traded competitors exist in this particular industry, so we chose these companies for comparison because they all compete for what we like to call leisure dollars. These companies compare well with Marine Products and are affected by the same macroeconomic factors, these being fuel prices, seasonality, credit availability, and interest rates. When one of these companies begins to struggle because of economic conditions, all of them feel it to the same effect. All of their competitors employ some form of debt on their books. The main variable in our financial model were volatile revenues, associated with the cyclical nature of the industry. To compensate for the volatility, we used values for consumer confidence, fuel prices, housing starts, and interest rates to help forecast future revenues. Marine Products has a reputation for high-quality products. Along with 2 J.D. Power and Associates awards, Marine Products has won 27 awards in product excellence and 10 trophies for Boat of the Year. Improved sound system and wakeboarding racks are just a few of many options that gives Marine Products its competitive advantage. Unlike Marine Products' direct competitors, the company was able to adjust its variable costs and regulate their production level to decrease their losses. The company temporarily ceased production in its Valdosta plant in late 2008 due to a lack of demand, resulting in a substantial decrease in SG&A expense. Because the company has so much flexibility in their production of units and ability to shut down facilities quickly at low cost, they were able to reduce the amount of capital they were invested during the economic downturn and was able to maintain a positive return on invested capital, whereas its peers did not. The Altman Z-score is an analysis model used to calculate the possibility of a company going bankrupt within 2 years. The Z-score is a linear combination of 5 common business ratios: working capital to total assets, retained earnings to total assets, operating assets to total assets, market value of equity to total book value of liabilities, and lastly, sales to total assets. Marine Products' Z-score was severely affected in 2009, but as you can tell from the color coding, the company rebounded quite well in 2010. Marine Products trades on the New York Stock Exchange. The company has zero debt on their books and has 37.3 million shares outstanding. The stock price was beaten up at the end of 2008 and 2009 once the recession began. For the valuations, we used 4 different methods. We constructed a discounted cash flow model, which takes into account future predicted discounted cash flows, which is also independent of industry peers, giving us a target price of $7.53. The second model is enterprise value over EBITDA. This model takes into account the whole value of the company, including its cash on hand and outstanding debt, as well as future cash flows seen from EBITDA, giving us a target price of $7.39. For the P/E ratio multiple valuation, we calculated the P/E ratios for Marine Products competitors. Our calculations concluded that Marine Products peers trade at about 44.5 times earnings. We also forecasted Marine Products earnings per share for 2011 to be 16 cents per share, resulting in a target price of $7.27 for this model. Finally, for our price over book value multiple valuation, we calculated the average price over book value for the peers in the industry and came up with a multiple of 2.98 times. This multiple was multiplied by our forecasted price over book value for Marine Products in 2011, which is 2.5. This resulted in a target price of $7.51, all of which averaged out to our 12-month stock price forecast of $7.46. All investments involve different degrees of risk. You should be aware of your level of risk tolerance and financial situation at all times. Read any and all prospectuses carefully before making any investment decisions. Burkenroad reports are generated by Tulane students and are not certified financial analysts. Investors should come to their own educated investment decisions.